following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start the day here with the German DAX. That seems to be the one that makes the S&P make its move overnight. It had a 10-point move to the upside in the S&P, mainly due to what happened in the DAX. As you can see, it has some beautiful harmony that's involved. But what I'd like for you to do is to take a look at the next chart that basically shows the symmetry that you have here as we broke out early this morning in the DAX on August the 23rd. And you'll notice those little parallel channels that show breakouts, and those are the ones that you want to keep an eye on, because those are patterns that telling you you want to go a little bit higher as you go up. And as you can see now, we have completed a major Gartley pattern up here, up at this level of the high. And if we move on just a little bit more in the day, you'll see that we have completed another small Gartley. Now remember, this is a 5-minute chart, so you can't actually go to the bank with it. You just have to be really careful. But this has a tremendous amount of volatility, because at 10,600, between 10,600 and 10,500 is $2,500. Folks, that's equivalent to 50 handles in the S&P. There used to be 10 handles when we traded at 5 points, $500 a point, but now we're trading $50 a point. So the volatility, there's more volatility in the DAX than there is in the S&P. So keep that in mind. We are up against some pretty stiff resistance here. We're very close to making a new high in the S&P and possibly in the NASDAQ, but the New York Stock Exchange Index is still lagging rather badly. I'd like to share the next chart, which comes from our good friends at the Wall Street Journal, and we'll take a look at this. You'll note this is the volatility index as they see it, going back to 2006. As you can see, we have a record volatility, lack of volatility on the downside, which means there is absolutely no fear in the market at all. Boys and girls, if you don't pay any attention to anything, pay attention to this chart, for God's sakes. I mean, you go back and look at this, you know, it's a pretty good indicator that something bad is going to happen. And we got the market setting at an area where it hasn't moved for a solid month with no volume and virtually no breakout. There's something really, really wrong out there. I don't know if it's going to come from Japan or where it's going to come from, but it's going to be, you know, really interesting no matter what. Now, one of the things that happened last night at Bloomberg is they had a very, very scholarly fellow from London, School of Economics, talking about, you know, the big breakout in the Nikkei and how the people that were trading the stocks in Japan, the people that run the $1.3 trillion pension fund for Japan, which means that most of the stocks that are in there are, you know, they're all done by the government. So if you'll give me 1 second here, I will get this up and we will take a look at this. This goes back, give you a little bit of a history here. This chart only goes back to 1993, but the high was on December 30th, 1989. It was just a little above 39,000. I think it was 39,400 the Nikkei hit. And then we broke down, as you can see, we broke basically in half down to around 15,000. And then over the next 2 or 3 years period, between 1993 and 1996, we completed that 1, 2, 3, 4, 5 expanding triangle. And then, of course, we went down, making our final low in 2009, right when we had the, you know, too big to fail. And, of course, we tripled in price, you know, during that time of this. But if you're trying to make a case that the people that have been buying stocks for the last 2 years in Tokyo to help the folks, they need some help, folks. This is they called it the secret to the investing in Japan, is what the title of the Bloomberg article was. And they should keep the secret to themselves, because this thing's been in a downtrend for 2 years. And so all the stock that they bought over the last couple of years is going south. How are they going to get out of this? That's question number one. Question number two is, who sold it to them? That's the question that I would like. If someone's buying, someone's got to be selling. So who sold them the stock? My guess is it had to be something a lot smarter than they are, is because the stocks are going down and the people that sold it are the ones that are right. And that, my friends, is what makes trading. So the people that have been selling have been correct. So we'll see whether that's going to be neither 6 of one or half a dozen of the other. We'll have to wait and see if this is going to be a really important thing. Now, if you'll remember, we talked about the webinar I'm going to give tomorrow. I'm going to be talking about how to trade into Fed times and non-farm payroll report stuff. I just wanted to give you an idea of what happens. We're going to take a look here at the gold chart here over the past 5 or 6 trading days, including the Fed time. As you can see, we made a 1.618 expansion at Fed time. That was also a really nice ABCD pattern. We had a huge rally, almost matching the old high. And then since that time, that was on the 21st. And what we're going to do now is we're going to update this, and just to see how the pattern unfolded over the period since that time. So you'll see that how one pattern fits in with the other one. And if you look at this, you'll notice that we did complete a beautiful ABCD pattern last night up at the 50% level. That was equal to the rally that we had between August 17th and 18th. You're talking about a $20, $25 rally, and now we're backed off. We're right back to that 1348 again. There should be some strong resistance at 1351. That would be the 61% retracement of that move. But it's telling you that these markets are acting, very nice technically, and you are getting some good volatility in Treasury bonds. You're getting good volatility in crude oil. You're getting good volatility in the foreign currency markets that we've seen almost every day. It's just the stock market. There's nobody playing over there, I guess, other than the high frequency traders and the dudes that do the algorithmic trading. So these are the things that you want to, really keep in mind, that this is a different type market. It really is, and it's mainly due to quantitative easing. I noticed this morning they had an article on CNBC that 43% of the student loans are now behind. In other words, they're not making payments on them. And that's a really serious thing, because there's a lot of people out there with educations that owe a great deal of money. Now, whether they pay it back or not, I don't know. They'll probably swap it in for votes or something like that, which is always a possibility. Maybe not a bad thing, but we'll see, what's going to happen. We will have Rich Anderson on here at the break, I believe, at 9:30 today. And we get back from this first break that we have, we're going to take a trip down memory lane to go back to August of 1987, when we had a phenomenon going on called harmonic convergence, where we had 5 planets leaving the sign of Leo, and Jupiter, the planet of expansion, moving into retrograde. I just wanted to show you what happened during that time, so you'll get an idea of some of these things that we talk about astrologically do work, and when they do, you should pay attention. So 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've put a page here out of my book on astral cycles that I published in 1987. As you can see, that high that we're looking at was August the 25th of 1987. It's kind of hard to read because it's an old copy, but you'll notice that there were 5 planets that were leaving the sign of Leo, Leo the lion. If you'll notice that Jupiter was going retrograde on that Friday before that 25th. That's the Jupiter is a planet of expansion. We also had the new moon on the equator, making it a super full moon, a super new moon. So it was really a big thing occurring as far as, what we were looking at here. Just a second here that says that the chart didn't post, and let's see if it's up here now. Maybe we got it. I posted it twice, but sometimes they don't always do what we want. I think it's okay now. But the main thing that you want to look at is you'll see here that the market broke really hard from August 25th down into the 1st of September. That's when the book went to print. And as you can see, we're in the midst of a rally here. What happened here is that the rally went into October the 2nd, which was a perfect 61% retracement is where it topped. We had a solar eclipse down there in late September, and then we rallied into early October, which was a Venus-Uranus aspect. I believe it was a perfect 61% retracement. And from there, from October the 2nd to October 19th, we lost better than 50% of the, more than 50, we lost about 60% of the value of the Dow. We lost 16.7% on the 19th of October alone. Folks, on that day, there were only 13 issues that were up on the New York Stock Exchange that day, and I happened to be on the air with Bill Griffith at FNN, which was the financial news network that later became CNBC because of Sue Herrera's presentation to NBC to do it. But anyway, that's what happened. There were 13 issues up, and I told Bill, I said, I don't know what's going to happen from here. I said, I will tell you something, Bill. I said, if you want to buy anything, I said, buy one of those 13 issues, because if you can't get a stock to go down when the rest of the market is down 16%, and I'm talking thousands of shares, those stocks are strong. And if you would have followed them afterwards, those puppies they were the leaders. One of them was a lumber stock, as I recall. I forget what some of the other. There was an oil stock, and there was a couple of preferred stocks. But those stocks, there were only 13 issues. That's never happened before. And but anyway, that was a flash crash. Believe it or not, from October the 2nd to the 19th was a flash crash. It was the scariest time I've ever had in all my years, and I was on the right side of the market. But on that low that we made on October the 19th, the Dow hit, I believe it hit 1,666, and that was a perfect 61% retracement from the low we had made on August the 9th of 1982. So here we are in August. We've got a whole bunch of astro things coming due. With the Bradley model is already turned down a week ago, but the market hasn't caught up with it yet. But we'll see. You just got to be really careful here, folks, for a whole lot of reasons. Mainly the volatility index. Also, the patterns are such that we're just setting up here, going nowhere with no volume, and that's really the kiss of death. As Tom O'Brien's preached to us, the volume is the engine that makes the vehicle go, and we're just not seeing it like that. So we have to be extremely careful in here on the long side, and you have to be careful on the short side too. Let's look at it both ways, because you certainly do have that what you're looking. So we should be making a top in here within the next few days. Of course, we have this anniversary date on Thursday, the 25th, which I don't think it'll be anything really dramatic, but sometime in August, I believe we're going to see something that is going to be, very, very unusual to happen. Remember, our old high here on the E-mini S&P was at 2191. The key figure from my perspective to watch would be 2194, but we're not even close to any of those things in the New York Stock Exchange Index that we've looked at, many times before. We're still, way, in fact, we are still below the 78% retracement of the move from May 19th of 2015 when we had Norm Winsky on. And, we had Mercury going retrograde, and we had a new moon at that time. And we don't have another new moon for, I think, 1450, but another week. So we'll see whether it's going to last into that. Now, those of you that have followed the work of Chris Carolyn, who was one of Robert Prechter's devotees, did a lot of great research, astrological research, and he has done some counts that say that sometime in September, these lunar cycles are going to be coming together, and we'll have a situation very similar to what we had in 1987. I don't see that, because I don't see any 5-planet conjunctions coming in anywhere near that time like we had on August the 25th. That was a really key point for us, because when we did the research for the astrology, when we ever had 3 planets, you get a monster move. To have 5 planets, it was almost unheard of. It only happens, once every 10 or 15 years. It happened twice in 1974 in October, and then again in December. It happened in 1982. It happened in 1932. It happened in 1938. Happened in 1888. I mean, they're there, but you just don't see them very often, and that's what we had, during those times. And we had that, of course, on March the 5th of 2009. So, we're in a market that has been controlled by the Fed, as our good friend Shane Smolian from wolftrader.net told us about yesterday. Norm Winsky has been warning us. Bill Meridian has been warning us. And, of course, yours truly has been warning us. So just be really careful on the long side and be careful on the short side. But the The long side is the side to be more careful because you're setting up here on a clothesline and it's raining and there's lightning out there and the clothesline is metal. It's not cloth. So be very, very careful. That's all I can tell you. As far as the Treasury bond market, we're having another rally off that level we talked about the other day, that 171. We got down to 170.17, I believe. Now we rallied a couple of handles. There should be some really strong resistance in the bonds between 173 and 175. That's what we're looking at. Rates look like they're going to go higher. We've seen this in the Dow Jones Utilities, which has topped at the 1.618 level and have already been down 3 weeks. So we're starting to see some of that right now. Those of you that look at shorter-term patterns, if you'll take a look at the E-mini S&P here, we are making a very small 3-drive pattern here that should be coming near the old high, somewhere between where we are now at 2181 and 2191. But there is a nice 3-drive pattern forming as we speak. I'll try to get that posted as we come through the next break, but kind of keep an eye on that because it is a shorter term pattern that we're looking at, and we'll notice whether it's going to fail. Anything above 2194 in this would tell us that we better get a job serving ice cream back in Terre Haute, Indiana, because these markets could go a whole lot higher. So it's going to take a lot of volume to do it, but the volume could come. You never know. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, I believe we have Rich Anderson on the line. Rich, are you there?
I'm here. Can you hear me?
Yeah, very faint. What, are you in your Gulf Stream? Is that what the problem is?
No, my headset's not working today.
Let's do it tomorrow, Rich. I want to get you so everybody can hear you, and I don't want you to shout. So we'll have you on tomorrow. How's that?
Sounds good. Sorry about this. Thanks.
That's not a problem, pal. Okay, well, we missed Rich Anderson today because of a faulty headset, but we will take a look at the crude oil market because we were looking at that. We'll have Rich on tomorrow, so we'll see, how it works out. But anyway, let's take a look here at the crude oil market. As you can see here, we had that 78% retracement come in on Friday. One of the things we focused on in the letter this past weekend was the fact that we were looking for a pretty good correction here in the oil and heating oil and also the gasoline. And if you'll notice here that we backed off about 3 handles and we're making new lows as we come in this morning, as we start trading. So we still think we're going to get a little lower. There should be some pretty good support at around $45, near $45 a barrel. That would be a 10% move off of the top that we made here on Friday. And usually if it's a really good bull market, it's not going to correct much more than that. But the best thing to do would be go down to a smaller time frame like a 30-minute or hourly and try to find a really nice ABCD pattern, that would match up with that also, because it would be something I think, that you could probably be in for quite some time. Now, we had a request yesterday to take a look at natural gas, and we talked about it, but unfortunately I was not able to put a picture up, but we're going to take a look at natural gas right now. And as you can see, we did complete that ABCD pattern right near the 38% retracement. 2 weeks ago, we've already talked about that. And you see 3 days ago, we had that really deep red bar that stopped, right at a 61% retracement and then rallied back up. So this is completing an ABCD on the upside. So we want to watch that very closely. Now, we've been up to touch the 2190 level so far in the E-mini. Watch 2194, folks. That's the one that should be the real key thing to be looking at, because if we clear 2194, that breaks a expansion cycle of 1.27 that we haven't seen happen for quite some time. Now, the New York Stock Exchange Index is still trading below that, and also the NASDAQ is also trading below that. So there's not confirmation yet, but we certainly could get it, and any good volume today could really make this thing move, a great deal higher. So remember that that's always a possibility that we could be seeing if that is going to be the case or not. So just remember 2194, that's a key one to pay attention to. But between 2189 and 2191 should be some pretty good resistance in that E-mini S&P on a daily basis, looking at that today. As we move over to the Treasury bonds, we've had a question in the den, what do I think the upside would be? And I mentioned earlier that we should have some pretty stiff resistance in the Treasury bonds up around that 175 level. That represents a pretty good correction from the bottom. We're right now what we're looking at is a 61% retracement of the high that we made several days ago, and we'll put this in the den so that you folks can take a look at it, and you'll be able to see it firsthand, make it a lot easier on your eyes, and we'll be able to see that. And all I have to do now is to pull it up, which should be easy, or said than done, I want to say. Here we go, right here. I've got it locked. I think I'm figuring this thing out. I hate to say that, but it looks like I'm becoming a techie. I've lost my pocket protector, but I'm going to be looking to get another one. As you can see, this Treasury bond market has been coming down since the 1st of August. We've had lower highs in here, lower lows. That low that we made down there, you see at 170, that was a beautiful ABCD pattern. We pointed that out on Friday, and that's what's happened. Now, what's unusual here is that we've been rallying along with the stock market. Usually they go opposite part of the time, and this is certainly not the case this time. But we do have the 3 higher highs. We should have some very strong resistance between this 172.26 and 173.09. Those were the areas that we will be seeing. I noticed that we have all 10 of the S&P groups are up this morning, so there's a lot of buying coming in here this morning at amateur hour, and whether it's going to be continued or not, you have to wait and see. Give it the first half hour and wait and see where you are. That's the safest part of the trade, because if you're above 2191, and we're at 2190 now, so you're not talking very far. We could be looking at one of those strong trending days, but make sure you wait that first half hour. That's the key that you want to keep an eye on. So that's what I believe is the important part, because people bring these orders in early in the morning. That's what they're doing. They're filling paper pretty much like these two on the floor, only they're doing electronically now. And you want to be able to wait till that's out of the way and see if there's more buying coming in, because then if the buying doesn't come in, the markets will will drift lower. It'll be nothing more than a false breakout. But we just hit the 2191. We just took out those old stops that we were expecting to see happen. So we'll see what happens here in the next few minutes. But right now, the market certainly has a really strong bias. I believe we have something like a 10-to-1 advanced decline line going on here early this morning, which is in fact a big number in itself. And we have new home sales that'll be out today. And then don't forget, we do have Janet Yellen from Jackson Hole, Wyoming, will be coming in, I believe, on Thursday or Friday to give her updated view of what's going to happen. And believe me, they could do anything they want, which they usually do. Remember, it is not a government organization. It is a private bank for banks. So they take care of the Federal Reserve first and the United States government second. Anybody that doesn't believe that should read the book, The Creature from Jekyll Island, because that will give you an idea that we are dealing with an organization that is really there to benefit the banks, and that is in fact what they do. This is one of the reasons President Kennedy was so adamant against the Federal Reserve, as was Andrew Jackson. And both of those gentlemen were attempted assassination. With Kennedy, of course, it was successful. With Jackson, he beat it. Anyway, let's just look on here with the gold market. We've had a little bit of a rally in gold. We pointed that out at the very beginning of the show, that we should have some pretty stiff resistance up around that 1350 level. We've now backed off $4 an ounce from that level, so we'll see if that's going to be something that's going to be of interest. That's it, folks. We go through these charts day after day, and I know you get tired of hearing the same stuff, but I'm going to post this chart because it really is very, very important. That's this VIX index chart. That's really really, really important. I mean, there's just nobody out there that thinks this thing can turn around, and that's what you like.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're going to take a look here at this NASDAQ on a short-term basis, looking over the last several weeks. As you can see, we have a double ABCD pattern forming that double top that's there. If you'll notice the little red boxes that I've marked, those are 1.618 expansions. This is one of the main things that I'm going to focus on the webinar for tomorrow night starting at 5 o'clock to show you how the importance of these 1.618 numbers fits into your risk strategy and also into your trading strategy, because that's the ideal time to take a look at things, at least from the point of watching the market to see if it's going to reverse or not. That's one of the key things that you want to be watching. Now, Rich is not on today. We will have him on tomorrow, but one of the things that he wanted to talk to us about today was the cattle market. And as you can see, we're going to talk about that right now. You'll notice here that we had the big ABCD move down at that 105 level. Then we had the big move up at the 78% level of the high in May. If you'll notice that July 20th area, when we had the reversal bar, you'll notice that is marked with a little red box. We had one of those way back on May 23rd also. But the important thing now is we were looking for the market to come down into the 61% retracement here at this 109 level, and we've hit it 2 days in a row. Yesterday we had a pretty good rally off of it, and then it backed off some. So the risk here would be about a penny and a half below, would be below $1.08, put around $7.50. So you're risking about 2 cents from where you are right now if you'd bought at that 109.80 level. So this is a really important spot. If you look at this from a head and shoulders standpoint, you'll notice that we have a shoulder on June 20th, and we had another shoulder on July 20th, and then we had another, we had the head on July 20th and a shoulder on July 20th. So we got 30 days apart. Those are calendar days, 22 trading days. So you basically have some really good symmetry in here with some really good support. You know, that's the main thing that you want to be watching. So this is set up to be a potentially good trade here. We're down 2 weeks from the high, and we were expecting that, and it certainly happened the way that it was able to you know, mark up where we were supposed to be. So we've had a pretty good run here. We're still up near the highs in just about everything, but we really haven't broken out much. We went above the old highs by just a one tick in the old S&P, but that's still very, very early, and anything can happen, you know, from that level, and it certainly will do that most of the time. You must wait at least another 15 minutes until we get that half hour, the first half hour of trading, what we call the opening price of the day. That would be the thing to really, really keep an eye on, because once we get through that, that tells you that you could be in a really strong trending market, and you could go a lot higher. Because if volume would come into this market now, and it certainly could, there could be some shorts out there that are, you know, absolutely panicked. It doesn't appear that that's what's happening, but if it does, you know, you could get a really quick move above 18,700 in the Dow, which would make it, you know, very, very explosive. And then you would have to say, oh, well, this thing is going to go someplace where we didn't think it was going to go, and so you have to, you know, stand aside. Fortunately, you have other great markets to trade, like the gold market and crude oil market and the treasury bonds and the British pound. All have been, you know, very, very nice to us this past couple of months. And even though we've taken a few shots here, some have worked in the stock market. And as a matter of fact, the service that we have 24/7, we're short 4 stocks. And they're all working. You know, we're short Apple and IBM and Microsoft and XLP. They're all working. So it's hard to believe that they're working with the market making new highs. But that's, you know, what's happening is you're getting, you know, alternation of the churning between, you know, different indices, because you know, lately these last couple of days, your energy stocks, which had been lagging or, you know, were leading, are now lagging, and gold stocks, which had been leading, are now lagging. So they're taking turns as they churn, you know, from one to the other. And we have tremendous divergence between the Dow Jones, transportations, and utilities, you know, versus the stock market. So that's another reason to tell us that you need to be, you know, really careful in this area. So that's what we're primarily watching here early this morning as we come into the first half hour of trading. We got crude oil making new lows on the ground, or on the day, at 46.77. And remember, there should be very good support, about $1 a barrel lower in crude oil, around 45.77. That's the way it would appear to be. So I would really, you know, be careful and watch that, because it could be very, very interesting. If we don't hold that level, you could be looking at $42 a barrel easily, again, in crude, and that would be down more than 20% off the high, and that would challenge all these people that think there's been a big move, you know, to the upside in oil. And basically, you know, all we've had is lower highs and lower lows in oil, even since our low in February. It hasn't really, you know, really done very much. So those are the primary things that we're watching here today in the market. But as we come into early this morning, you know, we've got a, you know, really strong stock market, you know, based on what's happened in the DAX and some of the other things. And let's just double check this DAX, because with the rest of the market, you know, going up, I'm sure the DAX is probably broken out above that old high, signaling that it wants to go higher. And in fact, it did. It went up and made a 1.27 expansion up there at the 10,600 level, and that puts it above the 78% level. So there again, you're in the first half hour of trading. You've got to be extremely careful, more than any other time during the day. It's called amateur hour because people put their orders in the night before. They want to get in. It's let me in no matter what price it is, and that's usually not the best thing to do. So, that's neither here nor there. So, okay, any other questions coming in? Oh, we had one question from someone overnight regarding the price of the corn. I believe that if we can get corn down to the 331 per bushel level, we've got a chance there for a pretty good move. That would be a 61% retracement off of that 3 drive to a bottom that we had. That was a very, very powerful pattern. And if we could get it down to 331, I think it would be a pretty good spot where we would be able to take a long side of the corn and, be a farmer again, where you don't have to, buy the farm, you just can rent it out. That's the key thing to be watching. I think that the lesson to be learned today is when you listen to what they're telling you on CNBC, it's not always what it is, because they tried to tell us about how wonderful the Nikkei pension fund has been doing, and it hasn't been doing very well, folks. But that's not what they told us. They told us it's been doing good over the last couple of weeks. Yes, but over the last couple of months, no. So you have to look at the time frame, that they're talking about there, and that's the real thing. To challenge everything, as Jim Twentyman said, defy human nature, do the work yourself. That's the key, to what you want to be watching, in my opinion. Well, we've went up and we've challenged those highs. We did make new highs. We haven't actually charged ahead yet, and we got 10 more minutes. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've been asked to talk a little bit about the relationship between the crude oil market and the stock market, and we've talked about that earlier in the week. Also last week, we showed the correlations that longer term, sometimes they do have some correlations. Short time, they have some correlations, but there are periods where that does not appear. They're using different things to feed the financial press, and that's what's happening right now. We just made new lows over the past 3 days now. In our crude oil contract, we're trading down around the 46.75 level, and yet we've been very strong for 3 days, Monday, Tuesday, and Wednesday in the stock market. I mean, not really strong, but compared to what we've been doing, considering we have no volatility in stocks, they have been up a little bit. And that's the thing that really you should really pay attention to, is the fact of the lack of volatility and the fact that there's no one out there that think there could be an outlier event, because historically when they start discounting that VIX index, that's when it really comes out to really tell us that, you know, something really big is getting ready to happen to it. So pay attention to that. And that would be the one that you would want to be watching very, very closely, because, you know, we are up to old highs here at the New York Stock Exchange Index and also at the S&P. And if we do break out to the upside, and a breakout would be after the first half hour, if we're trading above 2194, I would have to say that, yes, that is a breakout to the upside, and you have to stand aside and look for another spot, you know, to try the short side, because that's going to be the side that's going to be the one that'll make a lot of money. It might be a flash type move down where we could get 1,000 points or more in the Dow in one day, which I think would be, you know, very, very easy to happen. By the way, if you remember that chart that I posted from my book from 1987, I was on the tube with Bill Griffith that day, and I told him that we would have a day sometime in October where the Dow would be down more than 300 points. And the way I figured that out was the highest move that we'd had before was 170. If you multiply that to 1.618, that's 300. 877-927-650.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.